Good day, friends. I'm glad to welcome you to my channel. Today we will take a detailed look at the topic of imbalances, discuss the different types of imbalances, and examine their specific features. So be sure to leave a like and enjoy watching. Let's start with the anatomy of an imbalance. Here we have two standard imbalances, and we'll take a look at the closest one. This is a bullish imbalance, let's mark it in green. Every imbalance has key levels that are fundamentally important to us. The upper boundary is the 0 level, then a quarter at 0.25, the 0.5 level, the 0.75 level, and the lower boundary is 1. Each of these levels plays its own role, because when the algorithm interacts with them, it leaves us certain clues. We will use these reactions to build a narrative, find entry points, and understand the future behavior of the price. Let's see what happens next on the chart. The price returns to the imbalance. Notice that the candle reaches the 0.5 level and closes above the imbalance zone. This indicates a certain kind of respect for it. What does this mean? If we have a bullish order flow and the price is moving in one direction, and at the same time there is a break of structure, this is called by different names: BMS, BOSS, or MSS, whatever you prefer. The main thing is to understand the principle itself. Let's mark it as BMS. After such a break, we expect the price to continue upward. Let's look at an example. Before this, the movement was downward. The time frame is 15 minutes. Futures E-mini on the S&P 500. The price was moving down, then there was a break and the formation of a breaker and two imbalances. All of this indicates a change in the character of the price movement. The price returns to the 0.5 level and closes above it. Again, this shows respect. When the price returns to an imbalance, order block, mitigation, or any type of block and does not go below the 0.5 level, this indicates strong respect, which in turn reveals the algorithm's intention and increases the likelihood of the upward movement continuing. It doesn't necessarily mean that this happened on the next candle. The price may fluctuate for a while, even dip below 0.5, but if it continues to respect the lower boundary of the imbalance, it is still considered respect. However, it is specifically holding the 0.5 level that indicates the strongest zone. Let's keep watching. It's now around 3:30 p.m. New York time. It's the last active trading hour, so we shouldn't expect any strong impulses. The price returns to the 0.5 level again, dips slightly below but closes above it. This is yet another confirmation. Next comes an inactive trading period, so let's just fast forward. Before the New York Open, the price moves back to the zone and even goes below the lower boundaries, but then returns and closes above 0.5 again. The next candle does the same thing. After that, the price no longer reaches 0.5 and breaks out of the balance to the upside. This shows that FVG doesn't have to be used solely as an entry point. It can also be used to build a trading narrative. Yes, you could have entered a position here, but you could also have switched to a lower time frame like the 1 minute or even the 30-second chart to find a more precise entry, knowing that the algorithm respects the balance it has set. After the break with the breaker, we see clear respect for the zone. Note that there is a breaker here and the price respects it. This increases the likelihood of further upward movement. Then the price comes back again, dips slightly lower but reaches the level of the breaker, right up to the breaker, as if that's exactly where it needed to go. After that, an impulsive upward move begins. This is already the New York session around 10 a.m., which is basically the London close. Notice how strongly the price respects this imbalance. It does not even go below the 0.5 level. This can't be a coincidence. The algorithm doesn't close the candle bodies here for no reason. The wicks don't concern us, they're just there to take out stop losses. It's the candle bodies that show us the real story. The wicks can be anywhere. Even if the price pierces the zone deeply with a wick, but the body closes above 0.5, it actually strengthens the signal. This indicates the price's intention to keep moving upward. Here you can quickly look for entries, find short-term positions, and use this for entries, exits, take profits, whatever you need. If you had an open position in the opposite direction, for example, a short all these signals of respecting the bullish order flow, the breaker retest, repeated closes above 0.5, they would clearly indicate that it's better to close the short. The probability of a reversal here is very high. And as you can see, the price really did move upward after that. It's also important to understand that many people believe if an imbalance has been partially filled, for example, halfway, then it is no longer relevant. There is some logic to this because the price does indeed react to the unfilled portions. But an imbalance can remain relevant for a very long time, up to 2 months, regardless of the time frame itself. Minute, second, hourly, or daily, all of them can be used for up to 60 days. Of course, you shouldn't mark every imbalance from that period on your chart. That would lead to analysis paralysis and chaos. Within a single day, it's enough to work with the nearest zones, and the price will refer back to them again and again. But during intraday trading, and for example, I trade exclusively within the day, I use the nearest imbalances, and the price can refer to them throughout the entire day. So you shouldn't think that if the price partially fills an imbalance, the whole area immediately becomes irrelevant. On the contrary, it remains extremely important because we just saw how the price reacts to all these levels and literally gives us clues for our next actions. Here we once again reached the 0.25 level. That is, the price exited the imbalance, then returned to it, stopped exactly at the 0.25 level, and after that moved upward impulsively. And the 0.25 level also gives us a signal that we are in a strong bearish order flow, and it is more likely that the price will move quickly and impulsively upward, as happened in this example. Of course, this cannot go on forever. Order flow can end at any moment. But as long as the algorithm reveals its intentions to us through such hints, we can and should use this in trading. At the same time, it doesn't necessarily have to be intraday trading like I do. Now let's look at the next point related to imbalances. For example, in the USD pair, we see liquidity being taken out during the New York session from the previous day's extreme. After that, there is a drop with a break of structure and an imbalance is formed. It makes sense to wait for the price to return to this imbalance and try to enter a short position. For example, to target the removal of this liquidity. Right here we have a liquidity pool located. The price returns to this area. We use our levels. The price respects the 0.5 level. The next candle does as well, but then there is a breakout to the upside. And here we can clearly see a lack of respect. The price moves beyond the boundaries of this imbalance with the candle body. This is a key moment for us. We're not really interested in wicks, they can be anywhere. What matters are the candle bodies, and with the body we moved beyond the limits of this bearish block. If we were looking for a short position, this would be a direct signal that it's better to close the position, even if the entry was from the middle or the edge of the imbalance. It would make sense to exit before hitting the stop, because the price has stopped respecting the bearish blocks, which means it's highly likely to continue moving higher. Let's see what happened next. Yes, the price really did move upward, but how can we use this to our advantage? Suppose you didn't enter a trade at all and were just watching to see if the price would respect this bearish imbalance. At first it did respect it, but the next candle closed and settled above with its body. All respect was lost. And at this moment, this imbalance turns into an inversion, almost like a mirror level in classical technical analysis. Now it starts to act as support. The price moved out of the imbalance, balanced it, came back and began to bounce off it. Now, this imbalance can be considered bullish even though it was originally bearish. And look at how after that, the price immediately started moving higher and higher. At the same time, it's not necessary to enter right away from this level. You can wait and look for an entry on a lower time frame. You can wait for the high to be updated, then for a return to the new imbalance that forms when liquidity is taken out. How did that happen here? The price quickly came back, touched the zone, and respected it strongly. The candle bodies closed not just above the boundary or the 0.5 level, but significantly higher. After that, the price continued to move upwards, setting new highs. Another imbalance formed here. You can even combine them here, since they follow one after another and form a continuous zone. Look, could this really be a coincidence? Exactly at the 0.5 level for 2 candles in a row. Yes, at first the price opened higher and moved up, and then made a manipulative move down within the candle. After that it closed higher again and continued to rise. Such internal manipulation on a 5-minute candle is yet another confirmation and respect for this imbalance. This tells us that at the moment, bullish order flow is being maintained and the price is aiming to move higher, taking out liquidity. We're not discussing the reasons for this movement right now. That's a topic for a separate video. If you're interested, let me know and I'll do a separate analysis. Right now, we're deliberately looking at all of this without the full context. In real trading, of course, analysis should always be built in context, with a narrative from the higher time frame to the lower one, using a comprehensive approach. But at this stage, our task is simply to understand imbalances. Here we see respect, and here as well. Here at first there was respect, but closer to the opening of the indices it disappeared, and the imbalance became inversional. The price exited it, returned, and then started to respect the lower part of the zone. Yes, the 0.5 level was slightly breached, but notice that the price clearly respected the 0.25 level, which is quite acceptable, especially on lower time frames. The lower the time frame, the more allowances we can afford to make. If this is a daily chart, we would like to see respect closer to 0.25 or to the boundary at most to 0.5. But if the price confidently goes below 0.5 on a higher time frame, then most likely the imbalance will be completely filled. But on lower time frames, it's acceptable for the price to drop all the way to the lower boundary of the imbalance, and that would still be considered normal. That's exactly what happened here. We respected the level at as much as 0.25 of this inversion FVG, or rather 0.75, since initially it was bearish and then became bullish. After that, the price moved out of the zone, and here you could look for a safe, quick, and clear entry to capture liquidity. Now let's look at the daily chart. Here we have an imbalance formed, and the price is returning to it. It goes slightly beyond the 0.5 level, but immediately with the next candle moves back above it. This is an absolutely normal reaction. If the price only slightly dipped into the 0.5 level and immediately left the imbalance, it means the PD array is being respected. And already on the daily time frame, you can use this to build your own narrative, your own scenario of what the price might do today and tomorrow. When we see one imbalance being respected, then another imbalance forms and it is also respected. This indicates a high probability of further upward movement. The price is respecting the bullish IPD array, which means we are in a bullish order flow. In such a situation, you can look for buy trades everywhere within the day. Of course, after a manipulation, there should be a clear strategy and risk management. This is not even up for discussion. Right now, we're focusing specifically on building the narrative. This helps to capture intraday moves. The same can be done on the weekly chart. Here we see respect, then respect again, and once more respect. Even here you could take small intraday scalp longs, despite the apparent consolidation and choppiness, because the price respected the lower boundary of the imbalance. We broke out of it, then tested it again and continued the move. If the price returned to it, it could be used as an inversion imbalance, essentially as support, to use the language of classical technical analysis for building positions. Next, after the structure break, we get a bearish imbalance and we return to it. The price strongly respects it and starts moving down. It's important to be careful here, but the 0.25 level works out very clearly. Then we break through it and already use this imbalance as an inversion. The price rushes upward. Notice here a new imbalance is forming and the price hardly drops below its boundary, only slightly within acceptable limits. Under such conditions, intraday longs could be taken again because the narrative here is obvious. This is not a full analysis. Right now, we're focusing only on imbalances and showing how they can be used in a strategy. There's also an order block here, and again, we use the respect factor. Respecting the 0.5 level of this order block suggests that we are likely to continue moving downward, and that's exactly what happened. This wick is not a coincidence either. The 0.25 level of the wick works just like an imbalance since wicks are actively used in order flow analysis. After that, the price moved downward for a long time from around February to September. Here we see an inversion imbalance, and the reaction to it is still holding up to this day. The price only entered slightly, respected it very clearly, and then went down again all the way to the current levels. There was also an imbalance here and again respect for the 0.5 level. You can see how several factors coincided at once. The wick, the old daily imbalance. All of these helped you decide on your entry. Next, after the shift, another imbalance appears, a return to 0.5, respect for the upper boundary, and candle closes significantly below the zone. All of this indicates a bearish order flow. On the daily chart, this provided a clear context for looking for intraday sells. Just an hour later, the downward movement became obvious. Here we also see a shift, then the price moving lower and lower. After that, the price reached the breaker, filled the imbalance, and look at how strongly this imbalance was respected even on the hourly chart. First, there was a reaction from the lower boundary, then a clear response at the 0.5 level, and the decline continued. Even in this seemingly chaotic situation, it was clear what to do next as long as you didn't rush and clearly understood your plan. Now let's see how to use this knowledge in practice, using my trade on Thursday as an example. Here's the context. We were inside a weekly volume imbalance. The blue lines are a separate topic. If you're interested, let me know and I'll make a separate lesson. Let's switch to the 30-second chart. This is one of the time frames I use. We entered inside the weekly volume imbalance. In the silver pool, we had a breaker. Let's mark it. We're using the familiar levels. The price went in a little, 0.5. A small margin of error. We came to the middle of the breaker, respected it, and started to move out. Then a volume imbalance appeared. Initially it was bearish, we broke through it, and then returned to it. Let's mark its levels so we don't get confused. After that, a bullish imbalance formed, and that's exactly where I entered the position. You can work this way too if you want to enter from the imbalance. You can skip 1 or 2 candles and see if the price respects it. If it just flies through the zone, then it's good you didn't enter because that would have been a stop loss, meaning the order flow wasn't on our side. Here the first candle showed respect and I waited for the second one. We didn't hold the full 0.5 of this imbalance, but we did respect the full 0.5 of the inversion imbalance, and from there the price moved clearly upward. Even if you were afraid to enter here, there was a second, more conservative entry when it became clear that we had a bullish order flow. The bullish PD arrays were respected and you could confidently take the move. There was this kind of position here. After this candle closed, there was an entry. The stop was 12 points and the take profit was at the nearest liquidity, so the risk-reward ratio was almost 1:2. How you can use the understanding of respecting and disrespecting zones. We had a bullish breaker, inside which we were, and the price almost reached the lower boundary of the volume imbalance. Here, so as not to overload the chart, I'll highlight the main point. Here is the 0.5 level, here is the lower boundary of the imbalance, and we can clearly see this area being respected. Yes, on the 30-second chart, the price did go inside, but within the range an SMT formed with other indices, after which the price moved up. Then there was a return to the breaker, respect for the 0.5 level, and the movement continued. The inversion imbalance further supported the price, and then another bullish imbalance formed within the impulse. The move turned out to be fast and quite impulsive. Let's even look at the timing. From the moment of entry to the take profit, it took about 2 minutes. Literally in just a couple of minutes, a 1 to 2 take profit was achieved. All in all, it was beautiful, fast and without any drawdown at all. The price wasn't even in the negative for a single second. This is just one example out of hundreds of thousands of patterns you can build if you understand the concept of respect and disrespect, as well as the logic of all the arrays in the PID. At this point, everything depends on your vision and your strategy. Thank you all for watching. If you're interested in trading with the brokers I use and trade with, be sure to follow the link below this video and register. See you next time.